what I will say, guys, about protecting your account, what you should know or what you should keep in mind is that firstly, this should be your number one rule. Ne? It should be your first rule. Out of all rules that you have in trading, it should be your first rule, protecting your account. Let me just use the annotations from Zoom. It should be the first goal. So that's the most important part, and that's how you are gonna consider it, and that's how you're gonna pay attention into it. It should be the first rule. You should make sure that in whatever that you're doing, firstly, you make sure that you are in trading, firstly, not just to make money, but to protect what you already have or what you have already funded in your account. So make sure that when you fund your account, you'll know that my first rule is not just to multiply, but it is to first protect my capital. Ne? Because that's how success comes about, making sure that we don't lose what we already have before we can make profits. That's why in businesses, people will never sell with a lower price compared to the price that they bought with. So if they bought the phones for maybe $1,000 each, they will not sell those phones for $500 each. So for them to make money, firstly, they should protect what they used, the capital that they started with, the initial capital. They should protect it first, and then making money will come after. Making profits will come after. So you should make sure that you don't lose what you have funded with or what you have started with in your account first. Make sure that whatever that you apply, it will make sure that it will protect this capital. Whatever rule, whatever system, whatever decision, you should make sure that firstly it protect my capital. Whatever risk management system or strategy or approach that you come with in the market, it should be trying by all means to protect what you already have. So then that's why there is this greatest quote that I always like and that I always share, that you should make sure that you see yourself as a risk manager more than as a trader. Because a risk manager's role, firstly, it is to make sure that he manages the risk properly before he can go further into multiplication or into earning some profits. So the capital should be your most precious thing in your account. If you fund with $100, that $100 should be the most precious thing in your account. So you should try by all means that you don't see it going down. You don't see it going down like nobody's business. So if it goes down, let it go down by the nature of the market, by how the market behaves, because we cannot avoid losses, but we can actually minimize them. We can actually minimize them. So if your account goes down, let it go down smoothly. Maybe let's say let it move from 1,000 maybe to 990 today, not just from 1,000 and all of a sudden today you are left with $400. So it's not something which should be happening. It means that you lack this first rule, which is it should be protecting or defending your capital. So if your account is to blow, we are not expecting a $1,000 account, a $100 account to be blown in one day. We are not expecting that. So if someone can come to me and say, I've blown my account today by just taking 2 trades or 1 trade, it means that there is something that you did which you are not supposed to be doing as a trader. It means that there's somewhere where you are lacking as a trader. So when it comes to decision making and discipline, those are the key things that you should try by all means to develop as a trader. So don't try to spend time acquiring strategies or knowledge if you don't have discipline, because discipline is the key thing compared even to knowledge itself. Discipline is the key thing. That's why we have a lot of traders who have knowledge. Everybody knows how the market moves. Everybody knows that we have trend lines, we have patterns. But then the question is, why are they not making money with that knowledge? It means that true knowledge or true value in trading, it is discipline. It is discipline. That's the best thing that you can acquire. So that's the first thing, guys. It should be the first rule. protecting your capital, you should make it your initial rule. Forget about the returns. They will come naturally and flawlessly. So just make sure that your first goal is to protect your capital, to manage risk. Then returns, they will just flow in your account. Because if you are trading right, there is no way you will avoid success or profits. So your goal should be trading right, trading correctly, having the right mindset, having the correct approach into trading. You see, sometimes there's something that really works into trading. So for a while I've been studying a lot when it comes to the people. I've been studying people a lot. For an example, the successful traders, or traders who have been known. Some of them, they've lost their money. So I've been studying these guys like Jesse Livermore, John Paulson, Jim Rogers, Ross Cameron, those guys who are known to have made money in trading. So I've been studying them, studying the way they are thinking, studying the way they were making decisions. And it is purely visible that it's not a matter of knowledge or strategy. It's a matter of discipline only, just discipline only. No matter what the strategy you have, even if it's a mediocre strategy, even if it's a lame trading system, as long as you'll go with discipline, you're just gonna enter the 5% or without any complications. So let's get to the next important thing. Gideon, welcome. Let's go to the next thing. Trading is not complicated, guys, but we should try by all means to filter all the mediocre information that we've received. We should try by all means to filter all those stuffs. And once you really consider doing that, you'll find out that you only have like few channels that you watch from YouTube when it comes to Forex, because there is a lot of trash out there. There are a lot of stuff that are tempting you to actually act like the 95% who are losing money. There is a lot of content that is prompting you, that is forcing you to act in that way, that is forcing you to flow in that river of those guys who are losing money. So if you really take things serious, you'll find that there are a lot of stuff that you will stop watching. There are a lot of PDFs that you will stop reading. There are a lot of information that you'll stop seeking. So it's only a matter of making sure that you really pay much attention into the stuff that really matters. There are a lot of guys who've been inboxing me these days asking about mentorship, and I keep on telling them that, to be honest, you don't need a mentor. To be honest. You just need few things: discipline, patience, and consistency. Those are just a few things. There is no magic that a mentor is gonna give you. So I was trying to get to the next point here. There is no magic that the mentor is gonna give you. We don't come with magic. That's why I am removing these things of providing signals in my mentorship. So I'm trying to filter all those stuff, because it really doesn't help. Because I can give you signals. And today I was thinking about something, that even if I can take a lot of traders and say, come, let us trade together, let us take the same trades, at the end of the day or at the end of the month, you will find that I have made money and they have not made money with the same trades that I've been giving them, with the same signals that I've been providing. Only I have made money and the rest didn't make money, because it's not an issue of only taking good trades, but the ability to control yourself as well matters. So it's something funny. That was something that I really that really enlightened me to see that it's really not an issue of being given accurate signals or magic strategies. We can use the same strategy, but we will never ever have the same results. I'm telling you, we'll never have the same results, because as I always say, the market is so tempting. The market is so tempting to the extent that I can say, let us buy gold. And yes, we buy gold, but you are also tempted to buy USD JPY and sell USD CHF, which I didn't say do it. You see, so that's where the problem is. So let me just give you the second point. So the next thing to help defend your account, you should have a maximum risk in a certain period, or maximum drawdown in a certain period. For an example, a day and a week, and as well a month. So this helps you to refrain you from the market. This helps you to just take a break aside from the market, because for an example, if you'll say only in a day I risk only 4% of my capital, meaning it will mean that in a day you are limited to only this risk. And let's say in a week you'll say I only risk about maybe 7. Wow, I thought people were muted. So this is what is going to save you and put you aside when you are supposed to be aside. Because the problem about people is that they keep on pushing even when the day is not good. When the day is not good, just take a break, you'll continue the next day. When the week is not good, just take a break, you'll resume in the following week. So having a maximum risk for every period, it helps to really defend you. Because if you don't have this, it will take you, let's say we have two people who have $100 account, and trader A, it will take him maybe let's say maybe, let me say, just 8 months to blow his account. Let's say he is a losing trader, but he has these issues, he has this in place. I mean, he has this a method in place of having maximum risk for a certain period. It will take him 8 months to blow his account, and maybe you don't have this, but you have the same account as trader B. It might take you a day, or let's say 2 days, to blow your account, your $100 account. So do you see that trader A, he even have permission or time to access to assess his strategy and see where things are not going right. But you don't even have that time, because your account will be consumed in 2 days, because you don't have a maximum risks for a day. You just risk even 50% in a day of your account, which is something that is purely wrong and not good at all for success. So you should make sure that in a week, you know that I don't risk more than 7%. I'm not actually giving you a number, I'm making an illustration. So 7% is just an example, and 4% is an example as well. So make sure that in this certain period, I don't risk more than this amount. So that thing is going to save you and say, no, John, you have risked 7% for this week. Even if it's Tuesday, say, no, you have reached your maximum risk for this week. So stay aside. So you'll not be trading Wednesday, Thursday, and Friday until the next Monday. So it helps you. And the conclusion of this as well, it is the first thing I was talking about, discipline. You should be as well discipline even in these things, that okay, if I decide to risk 4% in a day, it means that I will not exceed that, no matter how beautiful the opportunities are in the market. But because I've risked my maximum risk, I will not take any trade. That what you should be keeping in mind. So it's something that is really helpful, guys. So I'm just giving you things that I as well do. I give you things that I exercise practically. So even some of the guys that I've been mentoring, some of them I've been taking trades with them personally, they know that if the market is not working on our favor, sometimes I just don't trade for a particular moment, depending on how I've allocated my my risk management for that day or for a particular week. So these are things that should be included in your trading strategy. A trading strategy is not an issue of moving averages crossing. It's also an issue of understanding the risk patterning that strategy, understanding how you should protect your capital. So in your strategy, in your method, you should include these things as well, not just focusing on the technical part. The technical part, if I will tell you the truth, it is the most insignificant part when it comes to trading. Analysis, observing market direction, that is the most insignificant part. The real deal here is what I'm talking about: risk management, discipline, patience. Those are the core things. Those are the core things that every trader is required to have that mindset. And the hardest thing is that these things are a mindset, so that's why it's hard to develop them. It's easy for anyone to be trained technically or physically, so but changing the mind it's very hard. It's very hard. So make sure, guys, that you have these in place. Let me get to the next one. Make sure you have these things in place. So there is no magic that is going to happen. You just need to take a responsibility, full responsibility of your trading. Take full responsibility. You have tried all this stuff and you have seen that it is not working. Why don't you try to search and figure out what really works? Why don't you try to search through reading, search through studying? Why don't you try to say through research what really works? Because you should ask yourself that I've followed some signal, I've followed some analysis, I've followed some million strategies. Why is it not working? Why is it not working? That's what you should ask yourself. Why is it not working? And I think what has disturbed us as traders, more especially even here in Africa, because we have a lot of traders in Africa here, is that we've been inspired we've been inspired the wrong way. Let me not say by the wrong people. We've been inspired in a wrong way, in such a way that these people that have inspired us, they've made trading to look very, very simple, in such a way that there is no requirement of mindset or discipline or psychology at all. That's the problem. It is because they've shown us that trading is very simple in such a way that they forgot to tell us the reality of the market. You see, because when I climb the mountain and all of a sudden I'm on top of the mountain, it's easy for me to shout and say, it's easy, just climb between the rocks, it's easy. But actually not telling you that there are snakes along the path, there are thorns along the path, forgetting to tell you that you even have to carry a water bottle along the path, because there is no source of water. You need to carry a food package along the path. So because I am now overwhelmed by the fact that I'm on top of the hill, I forget to tell you about the circumstances. So I just tell you the easiest mediocre answer: just climb up, you are gonna reach on top. And all of a sudden you climb up, you didn't bring water, you didn't bring good shoes, you didn't bring good clothing, you didn't bring food. So all of a sudden you become dehydrated, you become hungry, you become bitten by snakes, and you don't reach the top of the hill. So that's what has happened to us as traders. We've been inspired the wrong way. We haven't received the entire truth. We haven't received the entire truth. You see, I respect those guys who have inspired us to start trading. And the beautiful thing is that I as well, I've researched how they actually accomplished those successes. If you can look, a lot of those successes, just not of only traders, but a lot of successes, they look like overnight success. But it's not actually overnight. It's not actually overnight. It has been a continuous working, continuous persistence, patience, until there was that lucky break which happened. You see, so it's that why I told you last time that when it comes to luck, it's a matter of preparation meeting with opportunity. Preparation meeting with opportunity. So those people who are prepared, they've been trying everything they can. They've been doing whatever they could. And when the opportunity came, or when the opportunity came, because they were prepared, they were lucky. So that's the same thing that will happen to you. If you are prepared enough, if you have the right mindset, the right knowledge, the market will just present to you a simple opportunity and you will buy gold, only to find that when you are buying gold, gold is bound to rise forever. And you just make millions in a year because you were prepared. You see, because opportunity met with preparation and it produced luck. So that's what I'm trying to say. That's what I'm trying to say. Oh my gosh. So I hope, I'm sorry for the disturbance. I actually don't know what happened. Yeah, to be honest. I really don't know what happened. So, and I'm glad we are back. So I'm sorry guys for the disturbance. I really don't know. It just told me that the host muted every patient, every participant. Yes, I muted every participant, but then what ended the meeting? So okay, that's what I was trying to say, guys. Being prepared, it's just the only way out to have that overnight success. So I was trying to give you the next important thing. So here is one of the important things, or one of the worst things that retail traders do. It is withdrawing everything. This is the worst thing. This is the worst thing. So a trader will fund with $100 and all of a sudden he makes a profit. His equity goes to $300, and all of a sudden, because he has seen those beautiful sneakers and he wants to impress that yellow bone that he has seen in the street, all of a sudden he withdraws everything. He goes to buy that iPhone, he goes to buy that sneakers, and his account is now left with $0. So now you don't have anything to trade with again. So meaning you are being blinded by just a simple profit of $200. You're being blinded by a simple profit of $200. So then the question is, okay, what is the way out here? What is the way out here? What is the strategy? Because one can say, I have bills to pay. I have a stomach that I have to feed. So what should I be doing? So if you grow your capital to $300, instead of withdrawing the entire $300, rather withdraw maybe 100 and leave 200 capital. There will come a time where you'll be withdrawing even 1,000 if you will continue with this method, because you'll withdraw 200 and even next month, let's say you make another another $200 profit, then your capital will be entirely 400, ne? And again, let's say you just continue and withdraw that $100, and then the next month again you make another. Let's say you keep on doubling your account. In the next month, let's say maybe you just make $600. So you continue to withdraw that 100, or maybe you can add a bit and say 150. So you see that you still benefit, and your equity curve is still going up. So you are still able to continue to trade even the next day. Ne? That what I posted, but it was not directed to this, but it applies that you will love, or you will like to play even the next day, meaning you shouldn't blow your account in a day. That's what I was trying to say. Allocate a risk so that you will be trading even tomorrow. And even in this withdrawing thing, don't withdraw your entire capital. You will love to be trading even tomorrow. So that's a very, very important thing. A lot of you guys, you have made money. Volatility 75 have given you favor for there is no audio. There is. Yeah, there is audio. Yeah. So some of you guys, the market has favored you and it has given you a lot of profits, but all of a sudden you just withdraw everything. You go to buy something that will impress you. So this is that's why I say trade as a business. This is a business. This is not just a game of making money today and going to consume it even the next day. So this is not gambling. This is not gambling. So the path to consistency or staying in the game forever, it is making sure that you don't just withdraw your returns. So that's very, very essential. So let me just drop the last point, and then we're gonna go to rest. So let me drop the last point. So this is essential, guys. It's simple, and the beautiful thing is that whatever that I teach you, it might look like strange or something new, but it's actually things that you know. But the good thing is that I will never stop saying them, because they are the key things to success in trading. So success in trading is not complicated, just as it is not in everything in this life, because it is guided by simple rules, and those simple rules are just general. They are just general basic rules that everyone knows. But it is that familiarity brings contempt, so we don't take them serious. And then the last thing which I taught to you guys last week, I think it's last week, yeah. The last piece of this puzzle, it is knowing what you are doing. It's simple. Know what you are doing. Know the strategy that you are using. Know it from A to Z. Don't just apply indicators without knowing what they mean, without knowing how to exit. A strategy should be complete. It should have how you analyze or how you wait for opportunities, how you enter those opportunities, how you manage those trades, how you scale in those trades, how you scale out, how you also exit trades. So it should have everything complete, even if it is not stated for an example. When I make a video based on a strategy, I will not tell you how to scale in, because I've already taught that in previous videos. So make sure that you gather every information and you bring it together so that it works for the benefit of your account. So make sure that you know what you are doing. Knowledge. And there is a purpose why I brought this point as the last point, because it is not actually knowledge in trading. It is the last piece, because the most important thing is what I was talking about, the mindset of a trader, risk management, and everything. The knowledge, it is not that difficult. All of you guys here, you have knowledge. You know what is trading. You know how the market behaves. You know price action from A to Z. You know technical analysis as it is. So it's not something complicated to you. So knowledge, you should also have knowledge. I have a lot of people who come to me, and a lot of you guys who've started trading with indices. Yeah, this is directed to you. If you've started trading and you just started trading with indices, you don't have enough knowledge. That one is obvious. I've seen a lot of those guys who come to me who only started trading indices, because in indices there is nothing that you will just learn. You'll only figure out strategies only. So if you've seen volatility indices, there is no information. Although I try to make a course about it, but okay, not a lot of people have seen it, but it is there on my channel. I've made a course about it, starting from start to the end. Even in that course, there is no much information, because I made it clear that this course is not for absolute beginners. It is for people who know what is trading. So it is better for those guys who started with currencies, because when you trade currencies, you are bound to read those PDFs to acquire that basic knowledge of what is a quote, what are the currency pairs, what do they mean, why are they structured like this, what does it mean when the market is doing this. So if you don't have enough knowledge, make sure that you gather knowledge. The thing that I always say is that the market is not going anywhere. It will always be there. So acquire knowledge as early as possible, and then develop those characters of successful traders, and then it'll be easy. So know what you're doing, have the knowledge of the market in general, have the knowledge of your strategy. And another thing, just to add up, just to give you some bonus points, you shouldn't only focus on short-term trading, guys. You shouldn't focus on short-term trading. There are a lot of platforms where you can actually invest. For an example, investing in shares. I know those who are in South Africa, they are familiar with they have easy equities, they have other platforms. They also have easy properties. Unfortunately, I couldn't open that account because I'm not in South Africa, so they said I can only have the easy equity account, not the easy properties. But it is also a beautiful platform because you actually invest in properties. So you invest in properties virtually, so not having to build a property, meaning you get a share from the profits of that property. Even in shares, it is just like investing in stock. So if you hear people speaking about the stock market, it is no different from what easy equities is providing you with, because you also buy a piece of a company, a piece of a business. So I urge you guys that you open your accounts there. I opened mine a while ago and it was hard, but because I wanted to invest, so I had to force to bring a lot of documents. They took me up and down saying you are not a South African citizen. It's hard, and I had to force, because if you need something and if you need it so much, the entire universe conspires in helping you achieving that thing. So I had to get that account, and unfortunately I received it a while ago. I think I once spoke about it. So make sure, guys, that you invest in a lot of things. And I told you even a few months, maybe January, or yeah, we started January. I told you about buying Bitcoin, holding it for long. Ne? So just be an investor. Don't try to fake this thing of trading. Trading is not about just being a scalper. No, if you are gonna be a trader, you are gonna understand it clearly if you go broad into your investing. If you're gonna go broad into your trading. So don't be afraid to explore new things. If you hear people saying there is the futures market, know what are futures, know what are commodities, know everything. You will find out that the style that suits you, it is trading futures or trading equities or investing in something else. But because you are not interested in researching, so then you figure out that you are busy doing something that is not even fitting you, that is not even fitting your style of investing or your style of trading. So the problem about us, that we think that money is acquired by how can I put this thing, by I don't know how to use this quality and quantity things, ne? But we believe that we make money by applying that consistent action or doing things now and then, keep on repeating. Yet the greatest guys, for an example, like Warren Buffett, they don't even spend a lot of time. That guy spends months sitting, and then he just take one decision a day, and it then makes him a lot of money. He spent a lot of time trying to figure out a good place to invest, and then when he takes his decision, it just works on his favor. So he doesn't take trades like us. A lot of investors, they don't take trades like we do, that we're gonna buy like 17 times a day and we're gonna be selling 16 times. So it's not how it works, ne? Maybe you'll figure out that the best method for you, it is to invest. The best method for you, it is to maybe trade other assets. So just make sure that you do your research.